The question most investors ask too late. Every market cycle, the same thing happens. Something new explodes in price. Social media lights up. Everyone starts talking about it. It doesn't matter if it's stocks, crypto, real estate, or some new financial trend. The pattern is always the same. And most people ask the wrong question. Not, is this real? Not, does this actually work? Not, what problem does this solve? But, how fast can this make me money? Here's the uncomfortable truth most investors never learn. Financial infrastructure matters more than hype, and it always has. The systems that move money. The payment rails behind the scenes. The boring financial plumbing no one talks about. That's what quietly decides who wins long term, and who gets wiped out chasing financial hype. In this video, I'm going to show you why financial infrastructure matters more than hype, what most investors completely miss when they chase trends, and how the most powerful financial systems in the world grow without excitement, without headlines, and without noise. And real quick, if you care about long-term financial stability, smarter investing, and understanding how money actually works behind the scenes, make sure you hit that subscribe button. This channel is about clarity, not speculation, and we post new videos every week. Why hype feels so convincing? Hype spreads fast because it feels productive. It feels like momentum. It feels like opportunity. It feels like you're finally early to something big. A new financial narrative pops up, charts start moving, and suddenly it seems like everyone else already knows something you don't. That creates urgency. And urgency shuts off critical thinking. Hype convinces investors that speed matters more than structure, and excitement matters more than durability. But hype doesn't build financial systems. It doesn't strengthen payment rails. And it doesn't create long-term financial stability. Hype creates attention. Infrastructure creates outcomes. And the problem is most investors never learn to separate the two. What financial infrastructure really means? Financial infrastructure isn't exciting. It doesn't trend. It doesn't promise overnight wealth. It doesn't show up in flashy headlines. But it's the invisible foundation underneath everything. It's the settlement systems that clear transactions. The payment networks that move money across borders. The financial plumbing that works whether markets are calm or chaotic. When infrastructure is strong, money moves efficiently and quietly. When infrastructure is weak, friction shows up everywhere. You see delays, higher fees, system failures, broken trust. Most people never think about this layer because when infrastructure works, it's invisible. But when it fails, it becomes painfully obvious, and usually all at once. The mistake most investors keep making: most investors don't study underlying systems. They study price action, short-term trends, speculative investing stories, and that's not entirely their fault. The internet rewards excitement, not reliability. Algorithms amplify hype cycles, not financial plumbing. Market noise spreads faster than understanding. But markets don't reward attention. Markets reward systems that scale. The investors who consistently win over decades aren't chasing hype. They're aligning with infrastructure that quietly compounds while everyone else is distracted. Why infrastructure always outlasts excitement? Hype is emotional. It spikes optimism, then fear, then regret. Infrastructure is mechanical. It doesn't care how you feel. It doesn't react to headlines. It just works. That's why the most important financial systems in the world prioritize reliability over excitement. They focus on security, scalability in finance, interoperability, real-world utility, and here's the insight most people miss. The most valuable financial assets are often the least exciting ones. Because they're not designed to impress you. They're designed to survive stress, scale over time, and keep working no matter what the market is doing. Before we go further, quick reminder. If this kind of behind-the-scenes money thinking is useful to you, if you want to understand financial systems, not just chase trends, make sure you're subscribed. This channel is about boring but powerful investments, smarter decisions, and long-term wealth thinking. Alright, let's keep going. How crypto and modern finance fit into this is where a lot of people get confused. They look at blockchain, digital assets, or new financial technology and immediately focus on price. Up, down, moon, crash. But the real question isn't price. The real question is, does this improve financial infrastructure? Does it reduce friction? Does it improve settlement speed? Does it strengthen payment rails? Does it allow different systems to talk to each other? If something doesn't improve the underlying financial plumbing, then hype is doing all the work. And hype never lasts. Infrastructure does. Why institutions care about infrastructure, not buzz. Institutional investors don't move money emotionally. They move it carefully. They care about stability, compliance, scalability, predictability. That's why institutional adoption always follows infrastructure, not hype. Institutions wait for systems to prove themselves. They want to see real-world utility. They want predictable settlement systems. They want confidence that capital flows won't break under pressure. By the time institutions move in, the conversation has usually shifted from speculation to infrastructure. The boring systems quietly run the world. Here's the paradox. The systems that quietly run global finance rarely trend. They don't excite retail investors. They don't promise massive upside overnight. But they move trillions in capital flow, survive every market cycle, compound influence over decades. That's why smart investors eventually learn to appreciate boring but powerful investments. Boring means stable. Stable means scalable. Scalable means durable wealth. How to start thinking like a long-term investor. If you want to invest smarter, start asking better questions. Instead of asking, is this hot right now? Ask, does this strengthen financial infrastructure? Does this improve trust in financial systems? Does this reduce friction or increase efficiency? Can this scale without breaking under pressure? When you shift your mindset from hype to infrastructure, something important happens. You stop reacting emotionally. You stop chasing short-term trends. You stop feeling like you're always late. You start aligning with systems that quietly grow. The truth most investors never hear. Here's the truth that rarely gets said out loud. Hype creates stories. Infrastructure creates outcomes. Hype fades. Infrastructure compounds. And the investors who understand this don't need to chase every new narrative or shiny opportunity. They're already standing on the systems that power everything else. If this video helped you see money differently, make sure you subscribe. This channel is about long-term financial stability, understanding how money actually moves, and learning to invest with clarity instead of hype. Thanks for watching. And I'll see you in the next one.